morning and welcome to the VSA Morning Miner. I'm joined by Paul Rankin. Paul, how are you today?
Very well, thank you. Very well, thanks, Ollie.
Excellent. We have got results out from BHP, so let's start there.
Yes, that's right. Full year results out for BHP. So several announcements out from them on various aspects of their numbers. A key point here for investors: record copper and iron ore production, specifically 2 million tons of copper metal equivalent on copper, which is a 28% over the past 3 year period. And the iron ore production reached 290 million tons. Attributable profit rose to US $9 billion from 7.9 billion last year. So that's pretty good outcome, I would say, given the uncertainty around some of the commodities pricing during the year that they've participate in. Final dividend came in at 60 cents a share, and their capex spend for the next 2 years on exploration will be about $11 billion annually in order because the forward outlook, particularly for things that they produce like copper, are looking very positive for long-term price support. Workforce is now 42% female, and they did not have any fatalities in this past year, showing that their safety programs are having some favorable action being taken. And their effective tax rate actually went up to 44.6%. Part of that due to the actual individual relationships of individual countries as far as the tax take rules in those countries. So they also put out their economic contributions report and their annual report.
That dividend, the lowest since 2017, I think, with lower iron ore prices there, and obviously looking at higher capex for the next few years. As you mentioned, 70% of that is going to be focused on copper and potash. So those are the two key commodities that BHP are focusing on for the next, over the medium term. The other thing just to point out is that the net debt guidance range for the next few periods is being loosened, so that increasing from $5 to $15 billion to 10 to 20. So partly capex, possibly signaling some M&A ahead, but certainly going to be more active on the growth front over the next few years.
That's correct.
Drilling results out from Avino, where Andrew is going to be at some point in the next few days. But results out from their growth project, La Preciosa.
Yes, that's right. They released assays yesterday on four drill holes, which are twins of historic holes. Part of the reason for these twins is, first of all, to determine what the grade variability might be over short distances within the mine. And second of all, to test whether or not there is some surprises as a result to be had either in raising the modeled grades of these in the stope models for these or lowering them. In this case, the drilling results came in on the twinned holes where it appears that the mine model grades are lower than what the actual results may prove to be when they get in there and mine them. Examples, for instance, on hole 2503 that had an 8 meter true width intercept over 1,600 grams silver and almost 2 grams gold. Or hole 4, which came in with 544 grams silver over 6.5 meters true width. So these are very promising for being high margin volume tons early in the mine as the mine gets started up for underground production.
yeah, that average grade for the resource is 176 silver grams a ton. So these well ahead of that, and yeah, the widths that those high grades are being carried over, very impressive for volumes and true widths at that.
Yes, that's right. So, as I say, those stopes should be high volume and high profit margin tons for early in the capex payback for this mill.
Indeed. There's a couple of results out from some of the smaller royalty companies on TSX, Elemental and Empress.
Yes, that's right. We talked about royalty companies on as far as a subsector class to invest in, and these results you see here in these smaller royalty companies are just showing what kind of influence on their cash flows and revenues the big rise in precious metals prices has had. In the quarterly and interim case for Elemental Altus, royalty revenue rose to 9 million, and that's a 102% increase on a year-on-year basis for that quarter. And the cash flow had risen to 14.4 million, which is a 900% increase on the Caserones royalty itself, which is the big porphyry copper that they have a royalty interest in. So they've increased their revenue guidance for the year out to at least $35 million as a result. And they have almost 20 million in cash now as of the end of the second quarter. In Empress Royalties' case, their royalties and streams are a little bit smaller company, 6.5 million in revenue US, and total net revenue of 4.5 million, but that's an increase of 230% year on year. And they're also indicating that their mines are also in increased production mode here, and they had gone into a net income position of 1.6 million, whereas they had reported a loss in 2024. So royalty companies are very much taking part in the nice rally in precious metals.
Yeah, both done well recently in terms of share price performance. Obviously, Elemental was unlocked by that block trade and new shareholder coming in recently. I think we'll call it a day there, Paul, unless there's anything else.
That's all for me.
Very good. Thank you.
Mm-hmm.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.